Hello, everybody. I'm your boss, Joe Boss, and welcome to another trade research stream. We're going to be looking at a handful of assets today. Nothing too crazy. Been a lot of news on the yen, and also a lot of news on the semis. There is a fund that got took out after they leveraged 4 times. Everyone in the US equity markets has kind of been talking about that guy. He used to be in FTX for a bit. And you think he would have learned his leverage lesson back there, but nope. FTX guy got another FTX guy got an account blown. Thankfully, it has been that huge of a systematic error because Ken over at Citadel went ahead and saved everybody's behind by buying up that entire fund. Man, that guy is liquid. Okay. Let's go ahead and hop on over to the charts. So the big thing I'm looking at here is the yen. This thing dropped from top to close about 4%, which is 650-ish pips. That's a huge move. Man. Where do we go from here and why? Well, I started going through some of the outlooks. The GFIP, which is the global investment pension for the Japanese and a lot of Asian countries, actually. They aren't too keen on actually starting to buy Japanese assets as of yet. They're trying to push against that for now. I think it's still going to be coming, but they are publicly pushing against it right now. And if that huge, the largest pension in all of Asia that's based in Japan were to start buying more Japanese denominated assets, that would help continue this move. So we're trying to think of things that would help with continuing this move and why they would help, or things for against that. And obviously the 2 clear reasons against that are tariffs and the war in Iran. And to also now a degree, add a third thing there, the Russia-Ukraine war as well. Because if either 3 of those things start to let up and become easier than expected, like the wars get resolved, for example, the Russia-Ukraine war, from last time I checked, some prediction markets, is not expected to end now until like December of next year. And that forecast line just keeps going up and to the right because there doesn't seem to be any sort of meeting of the minds. You can only assume countries are working in the background to try and resolve that, but it's not coming fast enough to frankly make a difference in setting more positive expectations for a lot of these FX markets. And also it would be great for the stocks, right? STOXX, the European equity indices, the FTSE, the CAC. Yeah, it would be fantastic for European equities if that were to finally end. They wouldn't need to spend so much on defense, but they're still going to be spending that 5% of GDP they all want to try and reach, because the US is kind of sick and tired of paying for everyone's defense. So they're paying up, but that's causing quite a bit of fiscal strain. So look, I know let's try and focus on the yen and then go on to another asset. What I'm looking at here is a couple of indicators. So I went ahead and I pulled up this indicator here called timing dots. So what this does is it looks at a high or a low for a given period. And the current period we're looking at over is the next quarter, the current quarter. So we're currently in the third quarter of the year. And between the first week, you could say July, and the end or beginning rather, end of September, I call it end of September, that is the third quarter period. So in this period, whenever for a given quarter, the top has come in somewhere around here in this little red spot, right? It means, hey, if this is actually the top for the quarter on dollar yen, in history, we have actually seen 1, 2, 3, 4, 5, 6 times before, given this top and some tops that are similar to it, that the following lows for the quarter occur somewhere down here, which is actually about another 650 pips. So the entire move we just got in the last week could essentially do something like this and just kind of fizzle out. Oh. Something like that over the next 2 months. So let's go ahead and set a soft expectation for this so then we can kind of track and see how things are going. I know we're now officially in October, so I got to update my timestamp. And then that would be my baseline expectation. Now, this isn't the only thing I'm setting my expectation based off of. Like I said, a lot of the things that I mentioned were actually macro expectations, and then I immediately just jumped into the charts. And look, when you have an indicator that helps you make decisions very, very quickly, you save a whole lot of time staring at charts, and then you can spend most of your time actually doing proper research. Because this is just to help set a ballpark expectation of like, hey, if you're bearish, this seems like a good idea historically. And if you're bullish, you know, it'd be kind of strange to assume this is the low for the quarter and then assume we're going to go back to 166, 168. And also fundamentally, it doesn't make that much sense. Besant went on television and said, you know, the volatility in the yen has been not great. We don't want this volatility in the yen, and we think that the yen should be appreciating from here on. It does seem like the U.S. Treasury is going to begin giving more assistance in making sure that the yen appreciates. But also it would help with U.S. exports, right? So if the U.S. wants to increase its manufacturing base and it wants that manufacturing base to start breathing air, well, you also need to bring down the value of the dollar in order to make it appealing for people to buy U.S. manufactured goods. Also, with the new wave of defense companies in the United States working to scale, because a lot of people have been talking about, for example, munition shortages, missile shortages during the Iran war on the U.S. side. Well, there are a lot of companies trying to fix that, and they seem to be pretty effectively working on that, to say the least. So if the dollar starts to fall, well, guess what? It also becomes easier for all those other countries I just mentioned that want to hit that 5% GDP target to actually get more bang for their buck. To, you know, sure, they can spend 5% of their GDP, but now they'll actually be getting more weaponry than they were expecting and reach a level of armament that's very satisfactory for actual defense. I mean, look, if you don't have enough weapons, you can't actually defend yourself because you actually run out of things to shoot. Not shoot at, just things to shoot with, right? Man, oh man. Okay, so let's keep on going. Before we hop off of yen and this indicator here, timing dots, you can get it. Link in the description. You have to join the trading group. There's the trade research Discord that's free, and the trading group's $100 a month. And it doesn't just come with this indicator; it comes with all the other indicators that I have and the trade research group, the more private group, where you can absolutely ask me any questions anytime and go over some of the research that we have in the Discord with me. So on my other monitor here that I'm looking at, I'm just scrolling through trying to find the BOJ section here. Here we go. So I was mentioning that the U.S. Treasury is expected to help the Japanese Bank of Japan. Well, it's not the Bank of Japan they're going to be helping out. The U.S. Treasury's, you could say, comparable department in Japan is actually the Ministry of Finance. So the U.S. Treasury is not going to be working with the Bank of Japan directly. They're going to be working with the Ministry of Finance to do this currency intervention. So let's go ahead and listen here from BMO real quick. Although the Ministry of Finance didn't come clean, it appears that with support from the U.S. Treasury, that this here, red bar, and we can even look at it on a daily, we can even look at it probably on a 1 hour and just see how crazy that is. Yeah. Look how crazy that is. Look, even on this day, it said, hey, when your top is around here, your bottom's around there, and you could see it even puked at that last bar. But all in all, that was pretty good targeting. That was pretty good targeting there for this indicator just on the day. Even with all this volatility, isn't that crazy? It was still saying, yeah, you could move about 300 points. And there's one dot even all the way down here. And now this low is going to become a new dot. Wow. And you could probably tell, like, it was prices came down here and it was looking over here like, okay, that looks pretty good. And then it came back down over here and some people were like, okay, that looks pretty good. And then there's this literal final hour where it just puked. Man. Again, things you can do, analysis you can make, even in incredibly volatile times with nice indicators. Let's see here. So let me continue where I left off. Although the MOF didn't come clean, it appears that with support from the U.S. Treasury, 8.5 trillion yen was spent, shoring up the currency. So this entire move was 8.5 trillion yen that was being bought. There is another bit. I remember putting it down somewhere here. Well, looks like I didn't save it in my notes. I must still be reading that section. Crap. But there was a section here on how much the U.S. Treasury was actually helping. Specifically, that the way that they funded this intervention on the U.S. side was actually by selling euros to acquire yen. So in order to trade dollar yen, supposedly what they did is they essentially went short euro yen. And isn't that kind of crazy? Like, if dollar yen goes down, you would expect that the yen pairs, these reciprocals, this pair should be going up, right? But no. Well, actually, it's kind of the other way, right? If the yen's getting stronger, all these yen pairs need to also be getting stronger. But essentially what... Yeah, so I had it backwards there. My bad. My bad. But I'm kind of curious. Did this move? Wow, no, it still moved about 100 pips less. It's like 80 pips less. 70 pips less than, 80 pips less than dollar yen. But this is essentially supposedly the trade that the US Treasury took, which was shorting euro yen. They were selling euros and using euro essentially to fund the short. Which is in order to buy yen, which is rather I don't know why they made that decision. But I'll tell you what, I would love to learn about why they made that decision. There's also some stuff I said at the very beginning about AI companies. For the last month or so, they've been trending down. And you can see from the end of June, Micron's just been a wash. You can look at Nvidia. It's been holding up better-ish, but since May, it hasn't been doing so hot. Well, there's a huge fund with billions, tens of billions, hundreds of billions in leverage, but tens of billions in equity. That went belly up the other day. And it seems like that's going to be a catalyst now, also given the really good earnings that we've been getting so far, to see continuation from here. It seems like there's the sentiment has shifted when I read the analysts' expectations for the week ahead and the month ahead. After this last week's events, everyone does seem a lot more bullish. That seems to be the feeling that everyone's got now. And now with the US dollar weakening, and if the yen intervention starts to become supported by the market, continues into the end of the year, I mean, that will be actually pretty darn helpful for widening the rally. Because, look, if the dollar weakens, it means that when other countries want to do business with industry that's being reshored to the United States, it will be more affordable for them to do that. And so it will assist those industrial companies start to make money, which will broaden the rally beyond just AI in the United States, which is really what you want to see in just a healthy economy, period. But also as a form of diversification in case there's, another 30% pullback in AI a year later from now. So this would actually be a really good thing for AI companies to see the dollar come down and for all these reshoring efforts to materialize and become profitable, because it would protect the portfolios and the risks that a lot of people are exposed to with these AI trades. But it also means that the equity markets in other places around the world, not every single country is going to be hit equally. Some countries really want a weak currency in order to stay competitive, because the industries that they have are currency sensitive, because they do mostly exports of goods. But for example, there's a lot of businesses in Japan that really like having a stronger currency. Man, it's really going to be hard for that pension fund to justify that holding more yen-denominated positions if the yen starts to appreciate at a massive level, because Lord knows that they likely have a lot of yen short positions. And if that pension starts to unwind those yen shorts, that would be that would just be gasoline on the fire for the yen and for the Nikkei. Frankly, we can actually bring up equity indices and look at the #1 performing equity index that's been rebounding. You can actually kind of see here how poorly since late June. It's just been a linear channel. You can even draw that. And then you can extend it out like so. You can just see it's been a straight linear channel of price action. And now, by percentage gain, in a single day, because of this currency move, look at that, the KOSPI has been absolutely killing it. It's been I believe this is the Korean equity markets. Again, they don't just hold Japanese yen, but that is amazing. And this is also mostly due to the semiconductor rebound. A lot of semiconductor companies are in South Korea. So the rebound in AI now that's expected, you can see that with the 17, 18, almost 18% plus return on a single day here. Man, that is amazing. Let's go ahead and check out, that's Nifty. The S&P started to recover also, which is good to see. And then this is Topics. And yeah, Topics futures aren't doing so hot right now. There was a bump yesterday on the first bout of intervention that didn't continue in the Nikkei, which is like the NASDAQ for the Japanese equity markets. It's like their NASDAQ index. That's a good-ish way to put it, because you would argue that the Topics is more like their S&P or their Dow. I may have it backwards, honestly. But they do have different equity indices. They do. Man, Australia is getting kicked in the teeth. And then the KOSPI futures are down. These are actually still open. Yes. Seems like they are. Seems like they are. Okay. let's go ahead and look at a few more assets. Individual equities. We already checked out Nvidia. Amazon is up 15%. Apple is down 7%. People were saying, oh, Apple, you know, it's now the most valuable company again. Nope. Just totally reset 4 months of work. It's actually kind of insane. These moves. And they're all more volatile right now than Nvidia, which has been absolutely crazy to see. Man, Apple. Kind of still the king, but... Oh, and ARK's in an interesting position. Let's turn on the timing dots for ARK. Set to like 2%. How about Apple? Well, I don't know if we're going to see that big of a pullback. That'd be a massive pullback for Apple. I really don't know if we'll go below the July low at this point, going into earnings. I mean, earnings have literally just occurred. But I'm thinking going past the July low before we reach the next earnings, I'm not too sure about that. Yeah, and I remember people were like, they were okay with this, but it was mostly that the big purchase items were not going up. So it means consumers are kind of getting squeezed or not buying. Essentially, the MacBook Neo is what saved earnings for Apple in a big way. Or made the earnings for Apple, rather. All right. We had pretty bang-on positive expectations here. Yeah, you can see we set our expectation for where the low would come in for the month right off the bat. And then here we set our expectation at the very beginning of the month on July the 8th. Setting our expectation to right around there. And it looks like we were going to miss it. And technically, I had assumed this is a missed expectation. But net, that's still pretty good, honestly. Especially if you add it here. Going into an already expected holding position for the FOMC. And then you saw the yen intervention that made the dollar a lot weaker. So a lot of assets performed really well. You can see the dollar fell here against the Swissy. And now we can check the pound. Yeah, quite range bound there on the pound. The UK, I think the BOE is expected right now to stay on hold for a good while here. I did set a shorter term negative expectation here, but we got BOJ intervention, so that was kind of nuts. And the high and the low for the week came in at these rather extreme points towards the end. So let's check this out here. So this is saying, hey, given the low for the month is way back here, maybe going to 117 ain't unreasonable. But instead, it kept drifting down. So if this drift lower didn't occur, and then we got our spikes up here, our 200 pips worth of spikes, right? Man, absolutely phenomenal. Well, it's not exactly 200, but it's about 30 pips off. It's like 170 pip jump up. If we didn't get this negative drift, we would be up here on this BOJ intervention. So a lot of these monthly expectations were on the right path. Same thing with these timing dots up here, setting good bearish expectations. And Aussie, yeah, again, we had this negative drift in the third week and part of the fourth week of July. And if we just didn't get this sideways negative drift, then we probably would be trading about 100 pips higher, or at least a one handle higher. So right now, there's no reason in my mind to expect anything else other than continuation. And you can see the bearish expectations starting to get set here on the dollar. These were a bit too soon, obviously, but you know, you never expect the BOJ intervention, just like you never expect the Inquisition. And you can kind of see why we were setting those expectations, right? All these dots hanging around down here. So we're like, okay, at around this point here, it seems like we're going to use future highs and future lows. And it seems like this cluster here makes the most amount of sense to me. Around 99.5, because that's just where there's a big cluster of dots at a future point in time, and we're sitting at 99.8. We can even do a little chart replay here. Let's go ahead and walk this forward. And you can see that the dots update because we made a new high. The dots are relative to the current high. You can't like place it at a prior swing high. They just automatically update, which is why we have to make sure that the indicator works in replay mode and it's accurate in replay mode. Okie doke. And then on the dollar yen side of things, again, the interesting thing on this was on the quarter side, and 150, seeing another move here that just takes a little bit longer wouldn't be the end of the world in my opinion. But all these things on top of each other makes me a lot more bearish. At the beginning of this year, everyone was trying to get onto a dollar short trade. And going into February and January, there was all this talk about what was going on with Iran. The Iran war was just starting in January. All the 50,000 protesters were killed in Iran. It was being condemned globally. And then in February, the U.S. and Israel went in and started bombing. And leading into like the week or two going into that, we were like really trying to hold on to. I was really trying to hold on to the dollar shorts. But literally, like within 48 hours of the attack happening, because just so much information was getting passed around that an attack was imminent, you could see all of the military planes that had been building up, all the CENTCOM stuff moving around, and all the ships heading out from the United States, and all the planes flying around Europe going to the Middle East. The military, U.S. military planes. The signs were just too obvious. They were just way too obvious at that point. It's like, I think going into this weekend, the safe thing to do is to take this off and, that decision is mostly thanks to Ari doing a lot of the initial research on that and having a lot of the initial concern around that. Because even though I was looking at it, I was like, most of the time these things like fizzle out. But he was getting all the data on all the planes, and he's like, oh shit, the military's moving in. Joe, this doesn't look good. And he's telling me that for like 3 weeks. And I'm like, If only I'd taken those signs a little more seriously, that would have been an excellent dollar long. And man, that would have been an excellent dollar long. That thing did that trade did really phenomenally for a good bit. We did it did end up flipping on the following week and doing well off that part, but you know what? Now we have to look at the future expectations. Now we have to look at what's coming next. So, if there are new attacks on Iran, because it seems like that is the case. It seems like the next thing to happen is the attacks on infrastructure, so that means power plants and bridges. If the Iranians don't start coming to the table and continuously just demand we make peace with Hezbollah rather than them, well, Iran's going to get hit, and then Iran is probably going to counterattack. So now we have to figure out, okay, how is the market going to react to those counterattacks when they happen? How do we protect ourselves when that happens? Because remember, there's a timer. Trump needs an act of Congress to stay in this war, I think, for like after another 30 days. So damage, there's a timer that's already ticking. And if the U.S. doesn't do anything by the time that timer ends, then Congress needs an act of war, and right now it doesn't seem like an act of war is going to pass. It does not seem like that's going to be the case. So Trump is going to need to hit them hard, munitions or not, in order to bring them to the table again, so then he can get like a 2-week ceasefire going on, and then he can reset the clock again for another 60 days, because that's what he did initially. During that first ceasefire, when ships were starting to pass through the Strait of Hormuz on the Omani side, and then that ended because the Iranians now came clean and said, well, we don't actually recognize the Omani path. We actually don't recognize it as a valid path of transit. So we shot them. It finally came out that that's why the Iranians broke that truce. But the U.S., the president, Trump, went ahead and used that as an excuse to continue the attack by saying, hey, this pause was the end of Operation Epic Fury. And we achieved peace. That was actually the end of that mission. But now they've gone ahead and attacked us again after we've established this peace with the MOU, or at least tentative peace to negotiations with the MOU to peace. And it's not working out. They just attacked their ships. We got to go in again. This is a new operation. And so that was the excuse for resetting that clock, that 60-day clock. So now there needs to be another military effort that can induce a break that could justify maybe using that excuse again. So I totally anticipate that there's going to be another big bombing campaign against Iran sometime in the next 30 days before the timer runs out. Because if the timer runs out and there isn't a break in the fighting, that is like a 2-week period, roughly, or like even a week and a half, then it's very hard for Trump to legally say, oh, that 1 week pause, that 2-week pause in fighting, yeah, that was just now the end of the operation. We had achieved our goals. And now the Iranians have attacked us again, and now we have to start another operation, a new operation. So they need that excuse. There's going to be another attack. They're going to start hitting power plants and bridges in order to get those concessions. And we're going to see how markets react to that. I would imagine, though, we're now in a situation where if you're able to be long the dollar when that news hits, it's probably going to turn out fine for those traders. But I personally would be more interested in counter trend trading those, or rather trend trading those, because right now the trend that seems to be emerging right now is a weaker dollar. So I would like to stay on the side of dollar short trades in commodities and cryptos and bonds and in currencies and in equities. Trades that are going to see that extra oomph from a weaker dollar. But in those scenarios where Iran gets hit, it's going to provide some relief. And with that relief, you need hedging or just to not go balls to the walls with position sizing. I mean, that's pretty much what happened with this guy, this AI guy, this FTX guy who had his fund blow up. One thing that I really loved when I was reading a lot of the commentary is that people were going very easy on the guy personally. Nobody was attacking him personally. In fact, a lot of people were saying, a lot of hedge funds, a lot of the best traders in the world, they have a fund that blows up almost exactly like this. Almost every single trader makes this decision, this wrong decision, and gets hit for it. And that's very true. I've been hit for doing the same thing. I'm pretty sure every single trader, except for those who don't have access to leverage, have made this exact same error. But also the guy is very, very young. He's in his early 20s, and he's raised tens of billions of dollars, essentially. His next venture, even if it's another fund, is going to do very, very well. It's going to do very, very well. But a lot of people were calling him smart, were saying, he's a respectable guy, and that, this happens to a lot of the greatest people that are in our industry today. So I noticed, there's kind of a different reaction to this fund blowing up than a lot of funds we've seen blow up in the last, 5 years, 10 years. There's a lot more empathy being shown to this guy. Because there seems to be an expectation that he is going to continue to make waves in business in the next 40 years as he goes through life. So I've taken a note of that, and I'm going to start watching and seeing what this guy is up to. Because when so many people come out and they don't just, they just say, hey, that was a stupid idea. Most of these hedge fund guys, they get attacked pretty personally for making these decisions. But just across the board, people are saying, yeah, this was a really stupid decision, but it's clearly a novice decision. And they don't necessarily want to discourage him from not continuing to do business. Because when someone loses that much money, it affects them significantly. And this guy was trading on the order of magnitude in the billions, right? The hundreds of billions based on his leverage. And you know what? If he just wasn't, if he even just did 2x leverage, really the correct leverage for him was 2x. Because 4x wiped him out. 2x, he could have withstood this drawdown here. And in fact, it seems like one of the reasons for the fall in AI names over the last month and a half was because people found out he was overextended in this fashion and began to pile in on the shorts to actually squeeze him out. And once other people started finding out that there were people trying to squeeze this guy out, they hopped in and started to try and squeeze him out. And then now that he's squeezed out, now it's time to go back up. And it's a very dirty game when you're playing at that level. You really need to make sure you're in a rock solid position where if someone wants to try and screw you over like that, it's, you're going to be a pain in the ass to them, right? You don't want it to feel good as they're screwing you over. Like what these guys said, this is like vultures picking out a body while it's still alive and getting away with it, and you're just not resisting at all. And they just pick at you until you're dead, and then they pick at your carcass as vultures, right? Which is pretty much what happened to this guy. But man, to see again the level of respect and empathy given to this guy was really awesome to see. It was really, really awesome to see. So definitely going to be worth following this guy in the future. Okay. I think I've been going on for long enough. I think I've said my piece. If you guys would like to hang out with me, go ahead and join the Trade Research Discord. The link is in the WAP. We actually use WAP now to keep all the damn bots out. So all these bots that can't learn how to log into WAP and set up an account to join the Discord, they can't get in. So there's a lot less bots in the Discord, which is really, really nice to see. And if you want to learn more about these indicators, just feel free to hit me up. I'll go ahead and walk you through the indicators, or feel free to check out some of, just start a trial. There's a 14-day free trial for the trading group, the $100 a month trading group that comes with the indicators. And Car, I see it hopping in late. Gonna have to watch the recording now, my man. Thank you very much, though, for hopping in. I appreciate it. So, no, yeah, if you want to try this stuff out, go ahead, start the 14-day trial, I'll walk you through it. There's also videos in WAP for those who try it out, and you'll get to see what the trading group is like, what kind of research we're doing there. Alrighty, I will see you guys in a bit.